Hello everyone, my name is Moji. You're watching a Bitcoin bubble news channel. Not only is there trouble in real estate, but there is also trouble in office and residential real estate. It's right here. And this is where it is in private equity. Some of the terms we hear are private credit, private equity, and private credit. Private credit companies that have to take on stock because their businesses would go out of business otherwise. They don't have any more money. That's something you'll probably hear more and more about. There are also a lot more defaults, just poof. However, these are not making the news. Cathie Wood, founder, CEO, and CIO of ARK Invest, is still not optimistic about the U.S. market for 2024 and 2025. In a post on the social media site X, Wood warned of a rush to the U.S. stock markets for cash and safety that was like the Great Depression in the early 1930s. She said that, in our opinion, the search for cash and safety in the stock market today is just as strong as it was in the early 1930s during the Great Depression. When people stopped being afraid, the market hit bottom and started rewarding people who took risks again. As the Fed's plot started to point to much lower interest rates in the fourth quarter, the bull market and stocks grew very quickly. This year, the opposite has been true so far. We think that more price decline and lower interest rates will make coiled stocks move again. In the most recent episode of her monthly show, in the No Broadcast, Wood talks about important economic signs and market signals that she thinks show the U.S. economy and markets will be going through rough times soon. Wood is very worried about the rising number of bankruptcies and store closings as a sign. In the past few months, inflation, stagnant pay, and higher borrowing costs have caused thousands of stores and restaurants to close across the United States. CoreSite, a company that tracks stores, says that 24% more stores are closing in 2024 than during the same time last year. Some shops, like Dollar General and 7-Eleven, plan to open new locations, but CoreSite found that the number of new stores opening fell by 4% compared to 2023. Wood says that even though the government says everything is fine with the U.S. economy and markets, there are signs that things could get much worse and send the whole economy into a deep slump. The job report once more had something for everyone. Employment and non-farm income went up by 272,000%. That was a lot better than the 180,000 that were thought. The number from the previous month was changed to 165, which was not very good but was still better than predicted. The number of people working in households has dropped by 408,000. As we go through and sort through the hiring, what are we learning? Who is getting jobs? Well, people from other countries are getting jobs, some of which are legal and some of which are not. People who were born and raised in the United States are losing their jobs. Now it's very clear. Foreign-born jobs are at an all-time high, while jobs for native-born people are going down and falling. That's very interesting to us. It was also very weak the month before at 25,000. We now have a 4-handle jobless rate. Remember that it was around 3% before it went up to around 3%. We're now at 4%. That was what was expected. Those who earn a wage did better than expected, but the Federal Reserve did worse than expected, with income rising by 0.4%, 0% of what was expected. Now it was 0.2% last month. That might add up to 0.3% on average, but it's still hotter, as the Fed would say. The average work week was about the same. It was pretty flat during private hours. That's not a good sign. Temporary help. The last sign that I think the Fed really cares about is down 14,000, and it was down 12,000 the day before. That means it has been going down for a while. I think that this rolling recession we've been talking about will have turned into a real recession sooner than the statistics have been showing. This is because the leading indicators have been wrong. This is something that happens after a year, and especially after 5 years. I think earnings reports also help to understand that. The earnings reports are great, no doubt about it. Walmart has had great news on its earnings. Most other stores, including Costco, have bad reviews. It seems like everything is going well as these big numbers and stock reports come out. But if you look at more earnings reports, you'll see that's not true and that profits are going down. That's something we think will be good for growth. Innovation makes things better. Technology is going to help keep those margins as high as possible and boost production. SAB 121 and FIT, or FIT 21, are both crypto laws that actually passed through the House. This is interesting from an innovation point of view because they deal with economic policy or legislation. The Act for Financial Innovation and Technology in the 21st Century is known as FIT 21. The first one was turned down by President Biden. He thought it was an unfair limitation on the SEC, which should put limits on this kind of innovation to protect customers. I'm going to look at my notes here. With the votes of 76 Democrats in favor, FIT 21 was passed by the House. With the votes of 21 Democrats in favor, SAB 121 was passed by the House. This is very important. Most people now only care about crypto or digital assets when they vote. And it's clear that these Democrats have been getting the message because the party has been reluctant to back anything about crypto. On that side of the fence, people like Elizabeth Warren, Bernie Sanders, and others have made a big difference. At the same time, former President Trump is accepting crypto payments and promising to protect the right to self-custody in the world of digital assets. This is a big deal and supports the idea that this is turning into an issue in the election campaign. And it's a very big deal for young people in particular. That's progress. This is how the three parts of the government balance each other out. Let's start with the executive office. Okay, President Biden turned down one of these bills. Additionally, the court branch has basically told the SEC, you are wrong in a number of cases here, with the Grayscale case being the most important. This case led to the creation of spot Bitcoin ETFs. These bills passed the third branch of government, or at least one part of it. That's why we're focused on it and glad that it's an election topic. That's the House. We still don't know if the Senate will take up the FIT21 Act. This is an election year. Some Democrats are now voting for crypto because they know how important it is to a lot of people. That's the most important thing that's happened in terms of money matters. And when it comes to economic policy, we usually don't talk about new ideas. Taxes, spending, and other things are on the table, and those are problems that campaigners talk about. But we'll talk more about those later.